Brad Williams, Frugal Finance, Guide to Closing Forms. This is an abbreviated version of a mortgage documentation. This will apply mostly to, well, all loans. Again, this is provided by CFPB. I will provide a lengthy tutorial or a lengthy video on a full-blown promissory note is and all the other documentation. This is just an overview. So we're going to cover a promissory note, the mortgage security instrument, the initial escrow disclosure, and right to cancel form. Just 5 pages. The promissory note, the note is the legal document you sign to agree to repay your loan. You promise, hence a promissory note. You're promising to pay back what you borrow. The note will provide you with details regarding your loan, including the amount you owe, the interest rate of the mortgage loan, the dates when the payments are to be made, the length of time for repayment, and place where the payments are to be sent. It's pretty self-explanatory. The note also explains the consequences of failing to make your monthly mortgage payment or closure. Read this and all the other documents carefully. If something is different from what you agreed upon, contact your lender right away. Promissory note, it could be 1 page, it could be 14 pages. Here's the deal. Read it if you need it, is what I'm going to say over and over and over. This stuff can be intimidating. Why? Well, it's because the lawyers, they write this stuff up. It's pretty boilerplate, but it's technical. And there's really not a lot of room for negotiating here. So you can play hardball. You don't like the terms, walk away. I know you're thinking I'm buying a house and I have this promissory note. Well, here's what I suggest. Get this document way ahead of time. If you don't like the terms, then find an alternative. Breaking down the form, total amount of money you borrow, right here, number 1. 2, this is your interest rate. If you have an adjustable rate mortgage, this is your initial interest rate. Keep that in mind, initial. This section, 3, explains the consequences of being late on your monthly payments. And 4, this sample form is for a fixed rate. However, if the loan is an adjustable rate mortgage, you'll find an explanation for the way that the interest rate can change and any caps on how much it could increase. This document will be posted below. You want to get a copy of a promissory note? Just click this link when you open it up. Mortgage security instrument. This document may be called the mortgage, the security instrument, or a deed of trust. When you sign this document, you're giving the lender the right to take your property by foreclosure if you fail to pay your mortgage according to the terms you agreed to. This document restates the basic information included in the promissory note, as well as explains your responsibility and rights as a borrower. The mortgage refers to the lender or the recipient of the mortgage. Breaking down the mortgage occupancy. Now, here's a deal. I chuckle because there's some knuckleheads out there on the internet who are influencers in this arena, and they are so misguided. You really, really need to know the documentation in terms of this deed of trust. Here it says occupancy. Well, there's a guy out there who goes, well, yeah, I buy property, I rent it out, and then I will move it over into a limited liability company. Well, that's strike 1, strike 2, and strike 3. You're going to get a due-on clause if you do that kind of crap. So you're renting it out and you said, I bought it as owner-occupied. No. Number 2, you can't just bounce a property from a sole owner over into an LLC. Again, there's a call provision there. And then moving it over into some other gimmicky stuff. You can't do that. All right. It's called an acceleration clause. I call it a due on sale clause. There's a lot of different wording here, but occupancy, note that if the occupancy section states that you will occupy the property as your principal residence, then you must do so. If you do not move in and continue to use the property as your principal residence according to this condition, this section, you could risk foreclosure. And subsequently, this kind of stuff can bite you in the butt. Read it. There's some cases where you need to occupy it for 2 years. Then you're free to do what you want. Hazard substances. This states that you're not allowed to store hazardous materials in your home. If you do, you're violating the terms of your loan and your lender could foreclose. What does that mean? Well, you can see this hazardous substance as used in this section. Hazardous substances are those substances defined as toxic or hazardous substance, pollutants, or waste by environmental law. including gasoline, kerosene, and other flammables or toxic. Yeah, see, open up the cabinet under your kitchen sink and see if there's anything hazardous in there. Is a lighter considered hazardous substance? Common sense. Sometimes this stuff is just ridiculous. And then this acceleration clause, this is critical. This states that if you do not make your monthly mortgage payment on time, or if you do not abide by the other conditions of this loan, having current homeowner's insurance, your lender can declare your loan in default. If the loan is in default, your lender has a right to demand that you pay your entire loan off immediately. If you can't pay, the lender can start foreclosure proceedings. Again, there's a lot of things here in this very lengthy deed of trust. Technically, a lender has a lot of pull here. Initial escrow disclosure. The initial escrow disclosure statement details the specific charges that you will pay into escrow each month as part of your mortgage agreement. This is something long ago wasn't required. Now, if your loan is greater than 80% to value, this will be an absolute requirement. What does that mean? $100,000 value on a house and you have an $85,000 loan, that's above the 85% loan to value. And then the lender's going to say, well, we're going to enforce this escrow disclosure on you, and it's going to show what insurance and what taxes are being paid from your monthly check to the lender. All right. This is a touchy subject here in that the lenders are not supposed to enforce this escrow requirement if the loan to value is less than 80%. Sometimes it's like having your teeth pulled. It's that much of a pain in the butt. And if that's the case, you can push to shove. In other words, you want to control your money. In other words, why should you be prepaying your monthly property taxes when they're only due twice a year? So somebody else is earning interest on this, and it's not you. It's the lender. They're making, believe it or not, if you have $1 billion sitting in escrow that's earning interest, that technically should be credited to you. But again, there's just a lack of oversight in terms of the industry. So you're going to break down the payments. Your monthly payments include your current payment of principal and interest. Then you're going to have taxes and insurance and any other provisions. Some, and I don't think they can enforce this. If you have homeowners associations, you cannot throw that into this escrow account. It could be voluntary where you would automatically put that into this escrow, but that would be something separate from your deed. So this is your escrow or this initial escrow disclosure. And then this shows how your escrow money will be spent. Each line includes your monthly escrow payments and any disbursements to pay taxes and insurance bills and the running balance held in the account. Note that the escrow amount could change over time. Also note that anything that is paid out of the escrow account, you will not have to pay it separately. Okay, right to cancel form, called a 3-day right of rescission. In the past, you didn't have this right to cancel a refinance. That changed when CFPB came into play. It doesn't apply to seconds or rental property. Apply right to cancel form. If you're refinancing the loan, you have the right to cancel the loan within 3 business days. This document explains the rules for when and how you can cancel your loan and what happens if you do cancel the loan. If you're purchasing a new home with a mortgage, you don't have the right to cancel your loan after closing. Just keep that in mind. You have 3 business days to cancel the loan once all of these things have happened. In some circumstances, you can have up to 3 years to cancel your loan if some of the information on your closing disclosures is missing. And I discussed that in another video, and I'll leave a link up here if I can remember. And then your closing disclosure fulfills these requirements. And then to cancel your loan, notify your lender in writing right here. Just sign that. That's it. That's a brief introduction to a few forms that you're required to sign in each particular case. As I said, if it's a purchase, you're not going to have that 3-day rescission, but if it's a refinance, in some instances, you do. Let me know if you have any questions, post them, I'll address them, or just let me know if you're uncertain as to what these documents are. And if there's any other disclosures you need or want information about, let me know. Brad Williams, Frugal Finance. Thanks for watching.